Λοιπόν, καλημέρα. Ευχαριστώ πολύ όλους για τη συμμετοχή σας. Ευχαριστώ τους εκλεκτούς καλεσμένους μας. Good morning. I'll talk first in Greek, and then I'll turn it to English. Αρχικά, θα φωνάξω για ένα χαιρετισμό την πρόεδρο του τμήματος και στη συνέχεια θα συνεχίσω. Κυρία Μπουζούκη.
I think we're quite familiar with each other, so yeah, save it for later, for the presentation. I would like to welcome you. It's a pleasure to have you with us. We are looking forward to collaborations like this, and I hope it's just the beginning of our collaboration. So you're very, very welcome. One thing to our audience, please show your best self today. Okay, so thank you. Τον καλύτερο σας εαυτό περιμένουμε να δούμε. So I'll give the floor again to Kiki Kosmidou for your presentation, and then the floor is all yours.
Okay. Thank you. Ευχαριστούμε πολύ την Πρόεδρο. Λοιπόν, εγώ να αναφέρω το εξής. Σας το έχω πει ήδη και στην αρχή της χρονιάς, ότι στόχος μας εδώ στο τμήμα είναι να συνδέουμε περισσότερο το εκπαιδευτικό πρόγραμμα με τις ανάγκες της κοινωνίας και της αγοράς εργασίας. Να ενισχύουμε την εξωστρέφεια μέσα από συνεργασίες είτε με κορυφαία πανεπιστήμια του κόσμου, είτε με επιχειρήσεις, με τράπεζες, με επαγγελματικούς φορείς και ούτω καθεξής. Αυτός λοιπόν είναι και ο στόχος της σημερινής εκδήλωσης, να γίνει θεωρία πράξη. Ας μην ξοδεύω όμως άλλο από τον πολύτιμο χρόνο της εκλεκτής ομιλητριάς μας. And now let's talk in English. I welcome Snappy, the first Greek neobank fully licensed by the European Central Bank. And more specifically, I welcome Dr. Gabriella Kindert, CEO of Snappy. Thank you, all the team of Snappy, for being here. Special thanks to Dr. Gabriella for being here. Dr. Gabriella will talk us about redistribution of wealth in financial services and the future of neobanking. Dr. Gabriella, the floor is yours.
Good morning. Good morning. I'm very happy to be here today. It was just like yesterday when I finished my own universities, and for me, learning is a two-way process. I teach you, I learn from you. And I can very genuinely tell you that after being in my career for 30 years, learning never stops. So I look forward to learning from you, and I look forward to teach you. I would like to thank the faculty for facilitating this. I know a lot of people worked very hard to make this happen. So I actually spent my entire career in the financial sector, working in, I think, over 10 different countries, and I decided to be a banker, and I followed this path, and I've never been so excited about banking as I am today. And I hope I can give this passion and this excitement to you when I speak about the current landscape in banking and the future of banking. And why is that? Because probably more than ever, the benefits of data and technology can be passed on to customers, and we can provide more tailored services for your benefit. So, the title of my presentation is Redistribution of Wealth and the Future of Neobanking. Please do connect me via LinkedIn. So it's very important that if you have in the future have any questions, you address it to me and I will respond, I promise you. So what we are going to do today is we speak about the basics, what is banking. We will speak about what has happened since 2027, what are the drivers of changes, what are the benefits of banking and no banking, and some personal reflection regarding the future of banking. Before we start, I guess you had certain expectations when you signed up for this event, or certain questions. Do you want to share with me? Maybe some of you can ask, what are the questions that come to your mind looking at the title of this presentation? What are the things you want to have an answer for? Somebody from the audience? So, anybody? Okay, please. Okay, so what differentiates Neobank or Snappy in particular? Okay, so you want to learn what's Snappy, why is Snappy different? Very good. Somebody else? Just don't be shy. Okay, no problem. An interesting part that you will need to remember during this presentation, captured by this statement from Bill Gates. He said, we need banking, but we don't need banks anymore. And the interesting thing about this is that he said this in 1990. 35 years ago. And these are some of the trends we are going to speak about. I have a daughter who is studying in Leiden. She's studying law. And during the weekend, I had a dinner with some students like you, your age. And I asked them about banking. And I asked them a very simple question. Do you know what is a bank? Do you know what is a bank? How do you define a bank? And to my surprise, I got very vague answers. So I decided I'm going to spend the first 10 minutes of my presentation to make sure that you understand what is a bank. So banking is a basic societal need, a utility. Do you guys know where the word comes from? The word bank? Somebody? Okay. So the word bank comes from centuries ago when in Italy, in the small medieval cities, Tuscany and some other cities, in Florence, Firenze, people were sitting at the bank and they were doing some trading, some exchanges, some loans. And that's how the name bank, somebody who's sitting at the bank and doing these services, comes from. And do you know where the word bankrupt comes from? In situations when their reputation was tainted or they could not live up to their promise, the governor came and he broke the bank. So banca rotta, bankrupt. Please don't forget this, because it says that trust is very, very important in financial services. And even centuries ago, someone had the authority to break the bank. And the authority today is the regulator. It's a regulated industry because it's a utility. So I added a couple of phrases, actually, what came to, after a Google search to me, what is a bank? And I actually can understand my daughter that she does not understand what bank is, because I also believe that the definitions that you can find just within 2 minutes are not really addressing what a bank is. So what is a bank for you? Can somebody? What is a bank? So you have 100 euro. What do you do with the bank? Yes?
I would say that it's a business that makes money by lending money away and takes profit.
Okay. So if you have very, very good answer, if you have 100 euro, what do you do with that? You spend it, but you can also save it. Assume if you have 100,000 euro, what do you do with it? Do you put it in a shoebox? And you need a safe place, right? You want to feel safe, right? That's the most important reason if you want to put your money somewhere. Plus, you want to make sure that you earn something on this money, right? Because as we know, there is time value of money, and the longer you have the money, there might be inflation and your money will be worth less. So it's very important to preserve the value. What else do you need banks for? Okay, so what is the most important need you have on a daily basis? Anybody? Yes? Pay. You pay, right? You pay. Somebody else? Yes, just... You do basic transactions, absolutely. If you travel, what do you need a bank for? If you go to the UK, you want forex, foreign exchange. If you want to buy a house, what do you need the bank for?
For the loan.
Exactly. So you want a mortgage, you want a loan to buy a house,
Yes.
right? And then what you give to the bank, you take your salary in the future. I'm fully aware that you don't have salaries yet, but you take that money, you put it in a bank, probably you use that money on a monthly basis, but you want something long-term from the bank, 30 years, right? So what you give is short-term, what you want is long-term. But there are other people who save for their pension, who have insurance premium to put aside some money in the future if something bad happens to them. So you see where I'm getting into. The people who have the money and the people who need money, they are different people. And of course, it can be a matching when you ask your friend or ask your family to lend money to you. But most of the time, the people who need the money and who spend the money, they need it at a different time. Sometimes in different currency, in different terms, and of course, each of you and each project may represent a very different risk profile. So let's take this definition. A bank takes deposits from public and uses part of those deposits to make loans or invest through capital markets. Because banks hold only a fraction of deposits as liquid reserves, they are heavily regulated to protect financial stability. Key regulations include liquidity requirements and minimum capital ratios defined by Basel Accords. This is the Wikipedia definition. I can go 1 hour to break this down and say this is very, very superficial, actually. But at the end of the day, the business model of the bank is we take deposits, most of the time at certain rates. I will talk about it in a sec. We take deposit from you, many of you. We make loans for people who need it. And we need to make sure that the deposits and the loans have a difference in interest rate in order for us to make some money as well, and making sure that we have some buffers. But because the people need different money at different times, we already identified that, we actually immediately see the basic problem why this market, why banks are regulated. Because we need to make sure that the bank has enough capital if something wrong happens, a crisis happens, and you want to take your deposit back, right? So it's very important to protect your money, that in case there is a bankruptcy, bank is rotten, you get your money back. And the big advantage of a bank, a regulated bank, irrespective whether it's called Snappy, Piraeus Bank, Revolut, ING, ABN AMRO, HSBC, is that if you are called, and you can be called as a bank, you are under the deposit guarantee scheme. Yeah, so what does it mean? That up to 100,000 euro, you get your money back. So you don't need to be afraid that if you take your money that you earned with hard efforts, you don't need to be afraid that this money is gone. And this determines the equity requirements the banks must be having. And this is the reason why this industry is heavily regulated, because at the end of the day, it's a utility function. So I would like to sum this up with this picture, actually. You know where this picture is from? Somebody? Arc de Triomphe in Paris? A bank is bridging risk, maturity, currency, purpose, wishes, trust, and even fate. Talking about Islamic banking. So it's a roundabout of different values and making sure that there is a risk and currency transformation. So irrespective that you need the money for 1 day or 10 years, like mortgage, and irrespective if you give the money on your saving account or on your current account, and for the current account you can take it immediately, that is no problem. You manage to satisfy everybody's societal needs. Right? Are you with me? So now you know what a bank is? Okay. I'm going to go with a famous saying. Very often I heard this. So bank is with the rule of 3, 6, 3. A bank is which take deposits at 3%, gives loan at 6%, and all the bankers at 3 o'clock go at the golf course. Maybe it's the numbers are different, but it's you may hear it in your life. Having said that, I would like to go back to this initial remark of Bill Gates. We need banking, but we don't need banks anymore. Why did he say that? Anybody? Yes? Okay. Rise of technology. Anybody else? Could be. Yes?
The system, not the building.
Oh, the building. No, I think he meant more the societal needs as banking. Anybody else? Okay. We talked about this maturity and risk transformation, and there are many business models in the last 10 years that said, okay, you know what? The technology enables that I match your needs with your money available. And if we match this, it can actually be perfectly matching as a sort of peer-to-peer model. So we don't need actually banks because we can identify your needs, your desires, and match it with those who have money. Further, he also thought that there are so many technology companies that can actually do the job of banking better than the banks themselves. All right. So just as a wrap-up, I would like to go through these questions with you. So maybe some of you can answer. So what is the fundamental purpose of the bank? It's a utility, transferring values, different currencies, matching liquidity, matching tenors. It's a societal need. Why do banks need regulation? Because your deposits need to be protected. How does a bank manage risk? Do you have any idea? Yeah, okay. So risk management in banking became the most important subject in the last 15 years and ever since, by the way, because since banks exist, because if you can't measure risk, you cannot price a loan. So what do I mean by that? If you need a mortgage, if you need a loan, if I don't know your risk profile, what is the likelihood that you cannot repay the loan? I cannot give you the money. So the entire risk department is focusing on understanding, A, what is your risk profile? What are the tenors and the risk of my assets and liabilities? And the banks, the risk management of banking, they need to make sure that there is enough capital buffer to absorb certain shocks. It's very important. Liquidity, that's what I said. And why does it matter? Because you want to make sure that you can service your depositors. And how do actually banks make money? I think we covered that with the 3-6-3 approach. Okay, why do banks collapse or fail? Anybody? And this is, by the way, something which is still happening. If you look at SVB Bank or Wirecard or in the history, Lehman Brothers and a number of others. Why? What happens? What are the most important reasons why banks fail? Yes? Wrong predictions, that's one of the reasons, that they are underpricing, so their cost of funding, the cost what they pay for deposits, and what they get back from the loans, this 3-6-3, forget about the 3, but 3-6 actually end up that the revenue they are getting on the 6 is not enough to cover their losses, right? Because their losses will be like 9. In this situation, if you don't have enough capital, you are bankrupt. And this relates back to my point, bankrupt, you are not trustworthy, you are not living up to your promises, you do something wrong, you make a wrong judgment, your bank should be caught rotten. You know, never forget that. So this is one of the most important fundamentals, wrong risk pricing, very true. Second, have you ever heard about run on a bank? Run on a bank? Okay. Sorry.
If a bank gives only long-term loans and the interest rate in the market rises, it will end up to bankruptcy.
Exactly. That was exactly the case for the SVB Bank. Indeed, mismatch between assets and liabilities, right? And give you a very concrete example that can happen and could happen to you as well. And most probably as a lesson, I will take the opportunity to explain. But one of the most important societal crises was when people like you and me have taken Swiss mortgages. And it also happened to me, in my family. I mean, I remember my sister called me 10 years ago and enthusiastically mentioned to me that she managed to save significant part of her interest because she converted her mortgage from Hungarian forint to Swiss franc. And I asked her, so I said, I have two questions to you. How much of your salary or assets do you have in Swiss franc? And second, why don't you call me to discuss this question? So people forget very basic mismatch between assets and liabilities, what you get and what you need to pay. And if you can take away something from this lecture, please bear in mind for the rest of your life, mismatches between assets and liabilities are killing you, potentially, because you cannot control currency exchange rate, and you need to make sure that your income you are receiving is matching the obligations you will be having. And indeed, these are the most important reasons why banks fail, because they misjudge the tenor of their assets and liabilities and the obligations under these assets and liabilities. Having said that, there are some situations when almost it's inevitable that a bank fails. There is no capital in a bank which could withhold the situation that there is a run on a bank situation. So when trust is broken in a bank and you put your deposits in a bank and you hear, by the way, let's call a bank, like, okay, you put all your deposits in ING and you hear some rumors on TikTok and social media that, did you hear that ING is going to go bankrupt? What do? You immediately take your deposits, right? Immediately. And the first who are doing it probably are okay. And you have seen this in Greece. You had situations when the government needed to introduce some windows that you couldn't take money because to avoid this run on a bank situation, because there is no situation that the bank has enough equity to pay your deposits back based on the principle that they have given loans in mortgages, in capital needs of companies, and these people are not paying it back because they are long-term loans, and you want your money now. If everybody wants the money now, the system might collapse. And this is exactly what the role of the regulator is. In this situation, the regulator says in Europe, hold on for a second, don't run on a bank, because I guarantee your deposits up to 100,000 euro, right? The deposit guarantees are extremely important in banking. And especially currently, when social media is becoming very, very strong, and there are rumors created, fake news. If you would run on a bank based on fake news, the system will be just so volatile and unstable, and the bank cannot do this utility function. Okay, so we spent a bit of time on understanding banking. Any further questions on this? So it's all clear for you what a bank is? And it's all clear for you that in your life you need to avoid assets and liability mismatch, right? You are not going to take Swiss franc mortgages. Then I already achieved my objective from the day. All right, so then the question is, what is a neobank? And what is a challenger bank? In a way, the word neo reflects that these banks, like Snoopy, they are built on new technology, mostly cloud-based, and without physical presence. So what is a neobank and how does it differ from a traditional bank? I mean, traditional banks have been existing for decades, very often for centuries. I mean, the oldest bank Siena de Montepozzi is from 1497. Have a look, I don't know, but I mean, it's exactly the year, but it has been existing for years, hundreds of years, and I started working for Mace Pearson, a bank that existed also for 300 years. So they grow, which is very good because they understand risk systems, they know how to price risks, but in terms of technology, they are built on legacy systems, and it's very difficult to change. So why did neobanks emerge in the first place? We'll talk about the drivers in a second. I will need to explain this to you in more detail. How do they make money if they have no branches? Are neobanks safe, and are they real banks? I would like to start with the first, with the last statement, the last questions and the statement. If you get a banking license, a universal banking license like Snoppy, it's, in a way, it's not a neobanking license. It's a banking license that enables you to get your deposits back, to feel safe that the bank has similar processes and procedures in place like any other banks. So in spite of not having a physical branch, via the app, everything happens in a way that happens in a bank, just without paper. Do you know any neobanks? Anybody? Can you mention a few neobanks? I mean, you already know now one, Snoppy, right? Neobank. Anybody?
Revolut.
Revolut, indeed. Revolut. Anybody else? Yes? Which one? If I be? Where does this come from, if I be?
By Bit Bank. No.
If I be?
B-Y-B-I-T.
B-I-T, byte.
B-Y-B-I-T.
From Asia, you mean? Where does it, which bank is that? You see, I'm learning from you, so...
I'm not sure.
Okay, you're not sure. Okay, let's connect afterwards, and we will dig into it. But there are 350 different neobanks. So it's. I know myself approximately 50. Probably there are many that I have not investigated, and there are some very interesting business models, and still new ones are being launched. Yes. 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 Interesting. Anybody else like N26, Monzo? Yeah.
Yeah, N26 and Swiss Code, I guess.
Yes. Okay. Now, one of the things I want you to remember is that some of these names might not be a bank, actually. Very often, people mix up what is a bank and what is a neobank, and very often these entities are not having a banking license. They might have a payment license, and you might still think that they are a bank, but they are not a bank. Yeah, that's something important to remember. So before you do something with any of these apps, make sure that you are dealing with a regulated entity, which is a bank, to make sure that your money is safe. So here I'm wrapping up a bit the difference between traditional bank and fintech or digital provider or neobank. And by the way, I'm using these terminologies almost like simultaneously. And why is that? Because fintech was very often called, this bank, the whole segment, the neobanking segment was under fintech. But you will see that, in my view, in 10 years' time, nobody will say neobank anymore. It's a bank, period. So at the end of the day, it doesn't matter, but you are also not calling Spotify new Spotify or new Amazon, but it's just representing the new way of dealing with a bank, which is not via buildings, but via an app, right? Okay, so traditional banks have a lot of legacy technology, high-cost infrastructure, very often physical branches, though I must say that if you look at the branch network, it has been steadily declining, bundled services, and quite slow in innovation. And now banks are agile, so I always say that we are super agile at Snappy, very often cloud-based, efficient, low-cost operation, digital-only presence, so we are only an app, though we have 24/7 customer service, and we even will have a hub because this human connection is still important. And we have fast innovation cycles. So why Neobank matters? Neobank matters because they drive innovation in banking. And at the end of the day, neobanks matter because you are benefiting from it, for this low-cost infrastructure, because very often these neobanks are passing on their benefits, what they capture, to you. In what way? You don't need to pay for account maintenance, you don't need to pay for exchange rate, and you might get some higher interest. So, and this is really super exciting, and if you want to follow also very interesting data source, see innovation captures the neobanks and digital banking sector. And you see something super exciting here, that some of these banks, like Revolut, as you mentioned, Klarna, Wise, Monzo, became as big as these large banks. So I worked for ABN AMRO, I worked for BNP Paribas, and it's really astonishing for me to see that neobanks became larger than some of these banks that existed for hundreds of years, just like in a snap. I put this together to see how many years these entities, how much time did it take for them to become a unicorn? You know, unicorns are companies that are having a valuation in excess of 1 billion. And you see some companies from the US, mostly, unfortunately, but also some European companies like Revolut, Klarna. It took them less than 10 years to reach this status. Isn't it amazing? So this is the same picture with different setup. You know, some of these companies like ADM, which is not a bank but a payment provider, Stripe, the same, Klarna, which is a BNPL provider, though having a banking license, they have not existed in 2015, and now suddenly their valuation is higher than Deutsche Bank, which is the most important systemic bank of the most important economy in Europe, called Germany. And I have been giving lectures and presentations in the last 15 years about fintech. I also did my PhD about fintech, and I remember some years ago I was at London School of Economics, and I said, who would have thought that at one day PayPal will be exactly the same in terms of market cap as Deutsche Bank? And then another presentation 6 months after, who would have thought that it's going to be 3 times bigger? And other presentation 9 times bigger. And last year, Revolut had a valuation of approximately 45 billion. I just read a couple of days ago, now they're talking about 75. And in a couple of months, 100 billion. I hope I'm convincing you that I'm actually working in the most fascinating area in the world called neobanking. Okay, so this is another picture I really like. Looking at the same, how fast our world is growing. And I'm a historian myself. That's one of my degrees. I like to study history. But for companies like GE, it took 90 years to have 10 billion valuation. Shell, IBM, 70. Apple, 23. And then we have Revolut, 9 years. Neobank, 8 years. Do you see why the title of the presentation is Redistribution of Wealth in Financial Services? And this is only the start. The value that has been created by traditional bank is gradually shifting towards a new way of banking. And I'm really confident that in a couple of years, it will be accelerated further because of this infrastructure, the technology, what matters to price risks, and what matters to you today. So let's look at, very briefly, like in the next 10 minutes, what drives these changes. So, of course, technology is the most important driver. And this screenshot was made in 2013, that there are more toilets than the mobile phones. Technology is a basic infrastructure for everything. And that enabled a massive change in the world and new business models that not seen before. And you know very clearly Amazon and some apps like Spotify that enabled new ways of serving clients and new ways of addressing people's needs. I don't know what is the current situation in terms of toilet and mobile phones. Probably it's even more in favor of cell phones in comparison with toilets. But clearly the technology is an enabler for new services. Number second, the computation power of these devices. I used to hear that your mobile phone is more powerful than the computational capabilities of Apollo 11. By the way, guys, it was a long time ago. This device, the Apple 15 or 16, is 700 more times powerful than 10 years ago. The Apollo 11 is nothing in comparison with this. So you see the computational power. Now, second is the data boom. That these powerful devices, in terms of memories, they are allowing to capture data. What you listen to, who you are, all these algorithms that determine what you will watch, what you will do. And this data is captured to enable to understand your habits and needs. And in terms of risk management and identifying patterns and your risk profile, data is everything. So this is expected to accelerate further. You see the data boom, and right now we are at 180 zettabytes, and I think it's gonna grow further and further. As a result of data and the computational power, our habits changed. And I am old enough, but we have seen this industrial revolution, technological revolution in the last 20 years, gradually expanding, but now it's a scale I have not seen before because of AI. So the gig economy, we can work wherever we want in a very different way than we used to work. And COVID also accelerated the digital transformation. As you know, during COVID, we had to do many things via digital means, getting our goods, paying our bills, working with our employers, and so on and so on. So clearly accelerated how we want to be serviced. So combination of technology and data insights enabled that a new ecosystem was born. And data is not only some conventional data points, like what is your salary, how much, where is your house located, what is your tax return, what is your credit rating. There are many unconventional data sources. And this is happening as we speak. A couple of days ago, I had a discussion with some credit bureaus that explained to me the latest technologies. And I'm actually focusing 50% of my time on building these data technologies. And I will explain why very clearly, because I want you to benefit above all from it. So what do I mean by conventional data, non-conventional data points? So you use your mobile, you have an email address, right? If you apply for a loan, companies are able to measure how much time it took you to complete this application. There's a correlation between people who are hesitant with their answer. There's a correlation how they hold the device. I'm able to see, was it my son who has actually taken my phone and trying to get roadblocks instead of me charging my credit card, even though he is not he's not using face recognition, but the system knows, the fraudsters, the people who are checking the fraud, they know that he was actually using my PIN code instead of my face to get roadblocks. So it's a red flag. We are able to see, based on your email address, many things. We are able to see whether you are real. How long have you been using this email address? Have you connected this email address with Booking.com, Expedia? For how many years? It tells us to focus on those where we don't see the connection and the continuity to manage fraud. Oh, okay. So all this big data enables us to predict fraud, assess risks, disburse money, and monitor the loans better. In a couple of days, we are going to announce something very unheard of in Greece, which is a loan we will call 210. You sign up by your device. We take credit assessment within 2 minutes, and within 10 seconds, we are able to disperse the loan. 0 human interaction. Never heard of in Greece so far. In China, On Financials is doing something like that, and many areas, if you Google the concept, instant credit assessment based on data. So you are not a client, you sign up by digital means, you apply for a loan, we check your ability, and you get a loan. You don't need to go anywhere, you don't need to go to a branch. You can do it at 11 p.m. at your leisure from your desk. And this is actually the future of banking, and this is really only the start. Maybe a side note, but I still find it important to mention that because I'm in Greece as well, and I know you have had a major crisis like I had, but you experienced it differently in Greece than in the Netherlands. But this graph shows the total assets of European banks, which shows that after the financial crisis, major collapse happened and the banks were not able to lend. And that created, combined with the technology, some opportunities from non-bank lenders to address this need. What do I mean by that? I mentioned that some of your money are at pension, long-term money, right? Because you save, you have insurance, and that is with insurance companies and pension funds. So what happened a lot, that these companies teamed up with some technology companies, and they disbursed mortgages directly without intervention of banks, because the need was so big. Now, last but not least, this is a very important slide for me. The regulation enabled that this change, this data, I can use at Snappy and any other banks. And this regulation is called Open Banking in the UK and PSD2 in Europe. And is going to become PSD3. What does it mean? And by the way, this is only the start, because in a couple of years we will have PSD3 and we will have the data exchange obligations. It means that all banks will be required to share the data with your permission. All pension funds will be required to share data with your permission. All insurance companies have the same. So it means that me, as a digital bank, I'm able to get these data points and help tailoring your financial needs, that you are not going to do the mistake, also to take Swiss mortgages, and can also help your ability to assess your own financial risk. But above all, making sure that I can have tailored, immediate products. And I don't need to wait 2 more months to get your pension statement, and I'm able to disburse the loan instantly. Isn't this fascinating? With these changes, I can also see very clearly that the definition of trust is changing. You don't attach value anymore to nice suits. It's all about technology, UX, and a very different impression. So in the past, trust meant big buildings. Immediately you thought a bank is a building, right? A big building. Well-known brands, endorsement. However, currently it means a lot more great digital UX. It means that you expect exactly the same from a Neobank app, like you would be getting at Amazon or any other apps, or Spotify, or whatever apps you are using. What is the apps you are using the most right now? Snapchat or Instagram, or I don't know. What is Instagram? Okay. Instant support, and I think your generation is a lot more moving towards getting societal needs via mobile phones, right? And it's a shift of trust. So if you trust this more, you use it for everything. Why would you go somewhere else, right? an interesting study is that especially millennials and tech-savvy customers, they have absolutely no problem to switch even to big tech companies for financial products and services. And there are actually some fintech companies, some technology companies that have a banking license and they provide banking services. So maybe this is the reason why Bill Gates said we need banking, but we don't need banks anymore. Because if you really clearly look at that, some of these technology companies who have access to your data can measure your risk better. So this data is the power in assessing your risk, in assessing the liquidity. Those who have the data, they have a competitive advantage. It's not anymore big buildings, it's not legacy, it's not tradition. Those who able to get the data quickly, and they have the digital infrastructure to measure the risk and get you as a customer quickly, those will take even further market share from banks going forward. And why I mentioned this regulation, in PSD3, and it will be really obligatory that the banks are opening their systems and share data, and this will further accelerate this trend. So let's talk about neobanks, and some of this you see that how many are, and you know we are not going to dwell in all. You see some names, and I'm happy to share this with you. Some of the names are actually this is a sheet which shows you the technology companies, if they have a banking license or payment license or deposit partnerships, but you see they are increasingly providing financial services. Why? Because if you are Apple or if you are, let's take the example of PayPal, which is a payment company, you are able to get relationship with the clients, get data, and with open banking, add more data points, and you are able to lend as well. Yeah? So this digital intimacy, those who are actually having the first digital connection with you, and the data as a result, they will have advantage because this data is used to price your risk instantly. And this is why I exist at Snappy. And this is why I feel so enthusiastic, because I had the luxury to build something from scratch at the best technology. And I know that regulation is coming, and I'm building this data to price risk better, to monitor risk better. I'm going to stop in 10 minutes, and I will open for questions. But this is one of the reasons why some incumbent banks have decided to launch their new neobanks. You see on this side, for example, ABN AMRO. I'm Dutch, I'm coming from the Netherlands, and ABN AMRO launched a new 10. ABN AMRO has Sticky, ABN AMRO has a new brand as well called Boot, or if I want to be nasty, it's called Bot. Several banks decided to establish these neobanks because they recognize that they can't deal with their legacy infrastructure to start with. Secondly, they also see that the young generation prefers a very different communication than the older generation. Very different marketing terminologies than the older generation. So Snappy is who we are. We are focusing on younger generation and communication of the youngsters. The channels of communication is truly digital, and we have a very different communication strategy than you might see from an incumbent bank. But there are also other banks, and of course not only in Europe, but also in US. Chase is also a very good example. Chase is a brand being used by JP Morgan in the UK. They rebranded Chase to offer very competitive services in the UK. HSBC has its own digital brand, HSBC Direct. Some legacy banks have very good digital bank already for years, like ING Direct, but they all deal with legacy infrastructure. So these institutions like Revolut, who had first mover advantage, they are already moving towards almost becoming like a universal bank, or nowadays it's called like a super app, you know, like you can do almost everything with it. And that's where the future is going into. So what I meant is almost like a winner takes it all, you know, that the more data generates more competitive advantage, the more competitive advantage you have, the more valuation you have, the more you can invest. It's a bit like the Amazon syndrome, you know, like the winner takes it all. So we see some trends like that, and that's the reason why Neobank and Revolut are valued so highly, because first you get the advantage, you scale, and afterwards you add a number of additional services. So at the beginning, maybe up until 2023, it was all driven by growth, and now it's more like adding products, scale, and making sure that you're monetizing the different products the clients are getting. So these banks, especially like Revolut, they have loyalty programs, partnerships, and many cases personalized offers. So, do you understand now what neobanks are? Everybody? Clear? So, any questions so far? Or any comments, concerns? Okay, so think about this. You have a question? Sure.
Can you hear me? Yeah. So I would like to ask if you see neobanks accelerate the trend of job losses in the sector of banking, because we haven't talked about the jobs that are being created in the sector of neobanking.
Neobanks are creating huge amounts of jobs. The skills and the mindset required to be successful in a neobank are very different than traditional banking. It's a bit like the automotive industry. Something similar happens in banking. You know, like in a way, thousands of jobs will disappear in banking because the traditional skill set is no longer required. The skill set which is being required is understanding technology and understanding data. So the future of banking is not doing financial modeling in Excel, but making sure I have data engineers to get the data which is enabled by financial regulation, the PSD3 and open banking, to get the data and create for me competitive advantage because of this data. And indeed, some of these jobs will disappear. The skill set required is disappearing. I mean, if I go to a factory of BMW, and I have been there in Munich, you don't see any people anymore. It was different 50 years ago. Everything is built by robots. Does it mean that BMW is not employing any people? Very different people. Tech skills, data engineering. And it's not only skill set, but it's also mindset. Are you able to capture this shift? Do you understand what's going on? Do you know how many times I speak with bankers and they tell me, oh, I'm not afraid, look at our deposits, everything looks okay. Does it? Did you see this picture? Did you see this picture within 8 years? And 300 new neobanks? And how quickly it can go? Did you see the speed of value disruption and value creation? Isn't it obvious what is happening? People are in denial very often. And why are they in denial? Maybe because it's a different generation, or they don't have the skill set to understand what's going on, or they are feeling too complacent. Right? But it's quite similar to a trend which has happened in the automotive industry, and it does not mean that companies will not become any better, because there are banks that are actually capturing this trend and benefit from this trend and become even bigger because they recognize how important it is early enough. But this is a structural, strategic shift which is unstoppable. And if you look at opportunities in financial sector, clearly think of becoming somebody who is able to understand these trends and offer value in understanding data architecture and technology overall, and how I can be better in responding to your needs via an app. Yeah? So, who is benefiting from all this? You are too young, but I used to buy CDs for 20 euros. One CD, and I actually only liked one song. Right? What happened? What happened? Spotify came. I'm only paying 10, 12 euros for my entire family, and I listen to whatever I want. Right? And other examples is e-commerce. I used to wait for the season and get some goods for reduced prices. The price transparency, I want to buy this shirt. I can figure it out within 2 minutes, where can I get this the cheapest, where I have the most benefits. That revolution has happened in e-commerce. And unfortunately, many existing retail companies could not cope and went bankrupt as well. So, in my view, at the end of the day, this big data benefits you above all, and this technological revolution, you. Why? Because, I recently moved to Greece. I don't wish for anybody what I had to go through to get a bank account. It was painful. It was painful. If I can take this pain away from clients, while still offer the same amount of security and services like traditional banks, that your money is safe, who is winning here? You, above all, because you don't need to go to the bank and queue again and again and again. If I have your data, who is benefiting? You. Because right now, very often, you have no credit history. If I'm able to see that you are studying at a good university, your records are good, do you deserve some credit? right now, banks still very often look at your history, and some cases, history is tainting people, or do not have any records. The fast amount, still in the US, a lot of people have no access to personal loans because they have no credit history. They are de facto unbanked. You mentioned about changes in jobs. Approximately 50% of the branch network has disappeared. There are also segments in Greece that are not having any access to banking services unless you travel 30 kilometers. Who is benefiting? You. This digital access and digital underwriting and this philosophy of giving you a loan with the idea of 2-1-0, you are benefiting above all. So we are able to pass on these benefits of convenience and better pricing to you. Another thing, you know why Revolut became so big? They started with Forex, very easy product, because banks charge too much via Forex, and they started with Forex. Everybody is downloading Revolut because of Forex, right? So who is benefiting? Have you ever calculated, if you go to the UK, how much you are losing on just translation of currencies? 5%, 6%, sometimes even higher. At Snappy, we are charging 0. Who is benefiting? I'm giving you 5% free of charge, you know? You are benefiting. Because we can do it, the technology enables us to do it. So with this, we can do better pricing, cheaper and faster underwriting, more personalized services, and we can be more inclusive. And this is why I very genuinely can tell you I have never been so proud and I have never been so enthusiastic of being a banker than today. It's a fascinating industry with fascinating potential, and in Greece we have only seen the start of it. I think I'm going to pause here. So now you understood why I love what I'm doing. You understood that probably banking is having a very interesting future, maybe a different future than you have thought. Banking is not boring. It's super exciting. Do you have any questions or reflections so far? Yes.
In the situation we are right now, do we have the right to take a loan from our phone?
Yes, we will launch a product in December, and you sign up, and you will have the right to take a loan.
Like right now, I'm 20 years old, and I
Yes.
can take the loan?
Are you Snappy customer?
No.
Okay, I think it's very important to be a customer first, and when we launch the product, you can take a loan, right?
Okay.
Most probably. I don't know yet because I don't know you, but but potentially, yes, you can take a loan. It's a short-term loan, that's how we started, but at the end of the day, what we want to do is longer-term student loans, because we look at you, we look at, okay, say a credit-worthy guy, can he do something with his life? Okay, any other questions? Are you excited about Snappy and Neobanking, by the way? Anybody excited about it? Raise hands. Okay, anybody who finds it boring? I can take it, guys. Anybody who finds it boring, not interesting in Neobanking? Anybody who wants to be a banker? Wow. Okay, anybody who wants to be a banker now and did not want to be a banker 2 hours ago? Okay, I have to do a better job. Question.
Yes, you earlier mentioned that the process of getting a loan from the phone will be very fast, that the data you collect will be analyzed very shortly. I would like to ask, how trustworthy is this data? And for example, if a very good hacker, because there are around the world, a very skilled hacker, would like to provide a good image, a fake image of himself as a good customer, do you have systems that maybe detect these threats?
Oh, yes. We haven't touched upon that, but deepfake is one of the highest risks that is in the industry. And I must say we have the best technologies you can imagine, and I'm not going to say all the secrets, but we are able to detect deepfake. We have the system for that, and one of the reasons why we take live selfie and live videos is we are looking at so many data points. We are looking at real-time movements. We are looking at the environment. We have the best fraud protection technologies that exist on the market. And, you know, okay, now deepfake exists, but I also thought about it 20 years ago. My sister could also, she looks alike like me, you know. My sister could also have taken my passport, and we had situations in certain countries where you could buy a passport, you know. Fraud and fraudulent practices are always there, but changing in nature. My mission as an organization is to be ahead of these fraudsters, and it's also heavily regulated. You know, that's why we have to adhere to the highest regulatory standards how we onboard clients. And again, this is what I mentioned to you. So even if my son accidentally takes my phone and takes money for roadblocks, we can even see, because of his habits, that it's not me. Because 99.9% of the time, I take my phone differently. And the phone is using my face recognition. If my son takes it, he takes the password, you know? So these technologies exist. And again, the big data helps us to see these anomalies. So let's assume that you come with a fake ID, deep fake. You can even fake my voice. You know, this presentation will be public. You can fake my voice, no problem. What you cannot fake is creating an email address. You can create an email address like gkindert1@hotmail.com. But what you cannot fake is that this email address is not linked to my LinkedIn, not linked to my Booking.com account, did not exist for the last 20 years. So if my system works well, immediately it's a red flag. Inconsistency. And these are the inconsistencies we are measuring. Second, we are not giving 100 million loan for new identities. So we need to see, we need to build a record. And this is why these companies are becoming better also after a certain time, because they build your record. So I'm not giving you a loan immediately, which is high. I want to see your history. To be able to say, okay, this guy has been in Greece in the last whatever years, this IP address, never been to Somalia, and now you have a request from Somalia. Wow, isn't it strange? The IP address we can identify. Or your SIM card. How come? This is not the same address. And you know, this sort of deep fake actions are happening. I'm also fully aware that I can be a victim of that. You can be a victim of that. Actually, a couple of months ago, I got a call from somebody who appeared as a very trustworthy person from my WhatsApp with the voice of the person who is very trustworthy. And he wanted to trigger me to transfer a certain amount of money because he saw my fraudster saw my public profile. So they managed to get into my WhatsApp and pretend that this is another person. So if my husband has a public image or a public profile, and somebody, a fraudster, can deepfake his voice phone image, He calls me with his WhatsApp photo and asks me, Gabriella, with the voice of my husband, can you please transfer some money because I'm in a hospital? And these are the new fraud technologies that we need to deal with. And I need to be able to identify that this is actually not my husband. This is deep fake today. It is really impacting our lives. And, we will have a lot more regulation on that also going forward. But it's not only the technology which is evolving, but also the fraudsters and the fraudulent practices are evolving. Now, in terms of security, data architecture and the data security, we have absolutely the highest standards. So we are testing it. We even actively use hackers to test it. It's not easy to break a financial regulated institution currently. It's not impossible, but because you have seen some examples, but I mean, KLM was down, some banks were down, but it's very difficult. And also, what you see here is also very interesting, and why I'm also enthusiastic, because Revolut started its operation 2014, right, or something like that. So it took Revolut 9 years to build this, but it is also running on older technology. So why am I also enthusiastic about Snappy and our ability to become another Revolut? Because our technology is new. And these sort of revolutions can happen from anywhere. It doesn't need to be in the UK. It can happen from anywhere. Okay, any further questions?
So, after your presentation and having banked the rise of technology and neobanks, it seems to me that the traditional way of branching into banking, which is taking CFA exam and doing a master's degree in finance and banking, is useless, I say. So, what's your advice for us? We should focus more on technology-oriented degrees like data analytics or financial engineering, or it's a good idea to continue with the traditional path, like a master in banking?
Okay. It's a very good question. And your education is not useless. The elephant in the room is information overload. A data engineer, technology person, I can really guarantee you, it cannot and will not replace the context, what is important. It's important to know the context, and the technology and data are the means. But you need to know what drives revenue, what drives risk, what drives figures. You need to understand asset and liability management. You need to, the combination is very, very powerful. But you need to understand, if you go into banking, without these skill sets, data, technology, you will not get anywhere. So there are a couple of things that around the data, why your job is not obsolete, you know. Very often I see people creating big models. And even my husband, who is a quant, he comes to me, oh, I created this model, it's bigger than the Excel potential. I said, okay, but all your assumptions are wrong. I mean, I can look at it at the back of the envelope, all your assumptions are wrong, so what's the point? You know, sometimes common sense is very powerful. And actually, just a couple of days ago, I had a discussion with my team when they came up with a big model and said, oh, this is how the pricing should be. I said, okay, your assumptions are all wrong because nobody will buy this for this price. You know, so there is a sanity check of reality check, which is also very important, knowing the context, knowing history, knowing trends. Another thing that I want to mention to you is very often statistics and data, they do not see the story. They do not. And you spend a lot of time here in looking at GDP, right? It's a perfect example. GDP of Greece is great. Does it really show the inequality? Does it really show the distribution of earnings? Does it really show how happy the vast majority of the population is? Same in the US. So sometimes the new data set put in the old context are not giving you the best results. One more thing. Data is always looking at the past. Always looking at the past. You can predict, but you may not predict. And there are many black swan events that nobody predicted. COVID, nobody predicted. The wars, people did not predict. We are living in a world where a lot of things, a lot of events happen in an unpredictable manner. So that's something very important to realize. And it also means that data is not everything. And I think the more, it's very important to collect data, but I very much encourage my own management team and everybody who works Snappy to take a step back from data. Look at the context, look at the assumptions, look at the mental clarity. You remember this saying, if you have a problem, I spend, in the 5-10 minutes, I spend 9 minutes of understanding the problem and 1 for the solution. If you have too much data, you are running the risk of not seeing the elephant in the room, or you miss the forest. You don't see the forest from the trees. So data is not insight. Insight equals context and judgment. So please continue your degree. Be very good in it. Be a banker. Be a CEO of a bank. Just make sure that you understand why you need tech people and why you need data engineers. Okay. Any other questions?
So in the past decade, we also seen a lot of traditional banks develop web banking applications, and I want to know, how does a neobank differ from those applications?
You know, in a way, banking is pretty simple. You have currency, you are facilitating money, you have saving account, current account, mortgages. There are not many differentiating factors. One of the differentiating factors is actually speed, execution, personalization. And some banks are slow in adopting, and their tech and their application is a lot worse than you have seen from companies that are run on best and better technologies, and they have more data. So you are now seeing increasing differentiation between different apps, and some are laggards and some are better. You know, it's your own judgment. Is it easy to use? Is the system down? Is the pricing better? And that comparison, that insight will be more and more visible for you. So potentially all banks can have a great app. Why don't they? You know, potentially every bank could have had another Snappy or another new technology, the web bank. Why is it? Why am I aiming to have a different user experience than incumbent banks? Because I have a faster technology, I have a faster execution team. So everybody can do that. Everybody can be having a better app. It's like having a better cars, you know. Why is it Tesla who came up with the best electric cars 10 years ago? Why not BMW or Ford? I actually think that it's easier to start something from new than moving a big ship. But I mean, some people could prove me wrong because some banks have an excellent web-based application. But it's mostly what is coming now because of the regulation, because of PSD3 and data transparency that will shake up the financial services industry. And it's about the ability to adopt and the technology are using. And if you look at incumbent banks and why they are struggling so much, because in the last 20, even 50 years, we had a lot of consolidation. All banks are the result of acquiring many banks, system integration. It's a big ship. You need agility, you need to be fast. And by the way, this life cycle you will also see with existing neobanks. If they're not fast enough, they die. Many neobanks could not cope, and they had to give back the license. So it's about the agility, the speed of execution that really matters, combined with the amount of capital and a lot of things that determine future successes. And you know what I'm also thinking of now, that a lot of banks, especially in Greece, they have a web bank application, but their onboarding is still old-fashioned. Right? You still need to go to a branch to open a bank account. Yes. Any other questions? Somebody? Yes, thank you.
So Snappy belongs to Piraeus Bank, right?
Mm-hmm.
Since Snappy belongs to Piraeus Bank, can the bank take advantage of the technology of Snappy? Is that being happened?
Anybody can copy anybody, potentially. Snappy has its own governance, its own checks and balances, its own separate license. Potentially everybody can see what we are doing. The matter is, okay, if you have an existing infrastructure, it's not easy to take advantage of that technology, but they could potentially take advantage of looking at how we are doing business. We potentially can be an inspiration for them, though competition as well, But we have a separate infrastructure and separate governance. And it was also based on a very different philosophy to appeal to a younger generation. Different brand. It's a separate, totally separate, exactly. But again, everybody can have the data. With PSD2, potentially you can have the data. So if you have if you are a client at Piraeus and you want me to give you a loan with an API from Piraeus or National Bank of Greece or somebody else, you can give me the data. That's how the regulation is, to make sure that you are benefiting from a different kind of service. That data is not exclusive. So that's the whole regulation around the data architecture. With your permission, of course. Some more question? Okay. So this is Snappy. Do we have, I have a couple of discussion points here. What makes customers switch to digital-only banks? What do you think?
Because it's very easy to use.
Exactly.
And you don't have to go to the actual shop or the actual bank.
Definitely onboarding. And second, you see the utility value. You only do this if there is something in it for you, basically. Maintenance, account maintenance cost, or no fees. can neobanks remain profitable long-term without raising fees? Now, that's a very important question, right? I mean, it's all nice that you are benefiting from my services, but how am I making money? I'm making money because I have a cheaper infrastructure. I don't need to maintain big networks. And maybe my philosophy is not 3-6-3, but maybe 3-4 and 8, working day and night, and making sure that I can give you cheaper loans because I can measure the risk better, so I don't need to have a buffer. And my cost is lower than incumbent banks. Just as a recap, you know, banks are pricing risk, this 3-6-3 or 3-6. You need to be covered by deposit costs, cost of funding, cost of operation, and credit losses. So if my cost of operation is lower because I don't need to maintain the traditional banking network, branch network, and I'm able to predict risk better, as a result, my cost of risk is lower, you are benefiting. So, how should regulators balance innovation and customer protection? It's a good question, right? One of the biggest challenges why there are not many neobanks in Greece, it's very expensive to start a neobank. We have been getting a license last summer, and we just started operating 13 months after we got the license. 13 months, 100 people testing every day for an app, right? For an app. You have no idea the processes, procedures, the work behind that to make sure that your credit card can be tokenized. The regulator is happy. Everything is tick the box. It's a lot of work. It's a capital-intensive industry to set up a bank. So what could be the next phase of neobanking look like? Anybody? So what the next phase of Snappy could look like if you download Snappy? So how do you see what could happen to Snappy in 5 years' time? Anybody? Please.
You could add an AI machine that helps for the detection of thieves or...
Yes, absolutely. We can warn you that somehow your phone was taken, or indeed we can use AI to detect some anomalies, and we do call you and we block you, because we predict we might see fraud. Indeed, we can use that. What else? We can give you other products. But just forward-looking 5 to 10 years from now, what can we become?
Maybe Snappy could also build its personal AI that could work as a consultant or a personal banker for each customer with pre-regulated advices and financial knowledge. So that maybe if I have a question or how to do something, I can do a video call with his AI agent. But he would know me as a customer, not a general.
This is exactly what we are also doing. We are building this system that imagine if I have access, because the law will require me to have access. The law will require all systemic banks to give data. Imagine if I have your data and I'm able to help you and predict, okay, be careful, don't take that Swiss mortgages, or put aside this for your monthly regular expenditure. This is what you need to do. One of our missions at Snappy is to address the need of financial literacy. We recognize that it's this generation, I also see it from my own daughter, but also see it from my own example, my sister's story. People do mistakes, and unfortunately, they pay very heavy price for that. And with AI and with data, I'm also helping you and your financial health to give you warning signals. I mean, we cannot protect you. I mean, if you want to buy a Gucci bag and you only have no money on your bank account, I can only tell you, are you sure about it? You don't have sufficient funds. But how do I know? Maybe you have a new job in the future, or you sold your house and you want to celebrate, you know. So full insight is never available because we don't know the future. What I can help you is giving warning signals, but nobody in this room knows the future. So because we don't know the future, none of our predictions are accurate. So how Snappy will be? Any other ideas? How banking will be in 5 years' time? Okay. Shall we make this last question? Okay.
I think in the next year, the traditional banks can develop its own neobanks like Goldman Sachs do. And we see more digital banks than physical banks.
Yes.
And the competition will be much bigger, so we'll benefit even more for the technology.
Yes, you will benefit even more. These trends are not stoppable. There will be new digital banks, and I think the first movers, those who have first mover advantage, they will gain market share. That's my own prediction. And I'm really fascinated and honored to be with you today. I would like to thank you for your attention, and I hope I helped you a bit to give a context of the financial sector and understand what Snap is about, what I'm about, what you need to be mindful about. And maybe I helped you to love and understand this sector a bit. I don't know why we have this last, maybe my colleagues can help me why we put in this last sheet. Oh, we have some Black Friday events. And what happens if somebody makes a photo, then what happens? Okay, so that's interesting. So if you want to sign up for Snappy.
Can I say it in Greek?
Yeah.
Maybe
Greek, of course, Greek.
Οπότε όποιος γραφτεί στη Snappy μέχρι 1η Δεκεμβρίου και κάνει κατάθεση 20 ευρώ, εμείς δίνουμε δώρο άλλα 20. Και αν κάνετε το πρώτο σας Pay Later, που είναι το BNPL product, ουσιαστικά αγοράζετε κάτι και το πληρώνετε σε 3 δόσεις, σε 4 δόσεις πληρώνετε την πρώτη δόση εκείνη τη στιγμή, δίνουμε δώρο πίσω 30 ευρώ από το συνολικό ποσό της αγοράς.
Okay, so I hope to see you as customers. I hope to see you as employees. And I wish you best of luck with your exams in the coming weeks. And thank you for your attention. And thanks for the organizers as well.